Today, Bitcoin hits another record high. Grayscale proposes a new lower fee spinoff to its Bitcoin trust. And CoinShares completes its acquisition of Valkyrie's ETF business. We talked to the asset manager's CEO about its latest expansion into the U.S. market. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Another day, another record high for Bitcoin as crypto investors keep testing how far they can push this year's rally. Around 10 a.m. Eastern, Bitcoin touched a new all-time high of $72,992, but had given back those gains by noon, dropping to the $71,000 level. Ether also in the red today, dropping below the $4,000 mark ahead of its next big tech upgrade scheduled for tomorrow. But XRP rose to 70 cents in volatile trading. Okay, let's talk about the top stories. VanEck, the issuer of the HODL Spot Bitcoin ETF, that's ticker HODL, is slashing fees on the product to drive investment. In a post on X yesterday, VanEck said it will waive the sponsor fee on its Bitcoin trust through March 31st, 2025, at least for the first $1.5 billion in assets. If the trust assets exceed that, the fee will be 0.2%. That will also be the fee for the trust after that March 31st end date. Now, at the top of that post, VanEck said it's cutting the fee because it, quote, believes in Bitcoin so much, although its fund is lagging some of its biggest competitors. According to FactSet, HODL had about $306 million of assets under management, beating the likes of Franklin Templeton's EZBC, which manages about $205 million in assets. But it falls far behind BlackRock's iShares Bitcoin Trust with $14 billion under management, or GBTC's $27 billion. Next, and speaking of GBTC, Grayscale wants to launch a smaller, lower-fee ETF under the ticker BTC as a spin-off of its flagship Grayscale Bitcoin Trust ETF. The asset manager filed a proposal to create the ETF through the mechanics of a corporate spin-off, which would let the company use a percentage of GBTC shares to seed the new fund. That means holders of GBTC would be able to access the mini ETF without having to sell their shares, thereby having to pay a capital gains tax in order to transfer them into the new fund. Grayscale did not disclose in the filing what the lower fee would be. And of course, Grayscale successfully campaigned to convert its legacy Grayscale Bitcoin Trust into an ETF, helping to force the SEC's approval of 9 new spot Bitcoin ETFs this year. However, its high fee of 1.5% annually stands out among its new competitors, and the fund has seen more than $10 billion in outflows since they began trading in January. All right, for our main story. Today, CoinShares announced that it's completed its acquisition of Valkyrie Funds, the investment advisory business of Valkyrie Investments, as well as the sponsor rights to the Valkyrie Bitcoin Fund. Crypto World's Talia Kaplan spoke with Jean-Marie Mognetti, CoinShares CEO, about what that development means for the asset manager and for investors.
Big announcement for CoinShares today as it relates to your U.S. expansion efforts. CoinShares just completed its acquisition of Valkyrie's ETF business. Valkyrie, of course, is one of the 11 asset managers that got the green light from the SEC back in January to start offering spot Bitcoin ETFs. So I'm wondering why Valkyrie and what does this acquisition mean for CoinShares?
The CoinShare has been doing this job for 10 years. We've been doing in the crypto market for 10 years and been doing investment product for European investors for 10 years. So we had an ambition to transform what is today the European leader in digital asset management into a global franchise. And to transform our ambition into action, we need to get something in the US. The US is the biggest market in terms of allocation of AUM. So having worldwide ambition without having a play in the US was not exactly aligning with our ambition. So something has to be done. We took our time to find something. It was not something we did in a hurry. We have been watching the US for a long, long time. And the timing was just about perfect at the end of September when the opportunity came around and I would say the SEC was starting to move in the right direction of BlackRock filing. So all the kind of stars were aligning for CoinShares to be making an entry in the US asset management market.
Now, you referenced this, but CoinShares started offering spot products in Europe in 2015. And so obviously you have a lot of experience in this space. But how else can CoinShares differentiate between all the competition here in the US? There are a lot of ETFs trading right now. So what makes yours different?
I would say, think about Oakland Athletic during the Moneyball movie. It doesn't. We maybe not having the biggest resources or the biggest money to spend on becoming a bigger brand in the US, but we have the strongest scoring when it comes to batting statistics. So we know what we're doing. We have the resources to deploy ourselves in the US properly, and we also have very differentiated products. We have an ETF called WGMI. WGMI has been doing a great score in 2023. It was the best performing ETF in the US in 2023. So there is something to build on. We just launched last week a Bitcoin leverage product as well, a 2x leverage product. That's kind of differentiation from the other player. So yes, Bitcoin spot has been, I would say, commoditized by the competition like the BlackRock and Fidelity. But we have been doing Bitcoin spot, as you said, 10 years ago. So the question is like, okay, what do we do differently? What do we do new? How do we start bringing differentiation to the market and almost like an orthogonal offer? So as we're not just a Bitcoin spot provider, we're much more than that. And we announced before in the US the launch of our hedge fund solution. So there is a different few lines of product we can expand into the US.
Now, CoinShares plans to use the Valkyrie ETF infrastructure to develop its U.S. asset management business. So take us through your asset management platform. How will it work exactly, and what can people expect?
Yeah, so the asset we are acquiring, effectively, I will trying to make it very simple. It's an IRA license company, along with a 33 Act platform and a 40 Act platform. These two platforms allow us to bring a very different type of products to market, some very passive ETF, but also some much more actively managed ETF. And the combination of the two give us a very, well, at least a capacity to offer to the market something very different when it comes to digital assets.
So Bitcoin is up about 65% so far this year, and the cryptocurrency reached a new all-time high this morning, just under $73,000. So what do you think is driving the current rally, and how does it impact CoinShares, especially with this acquisition in the mix?
Look, I think Bitcoin is an hyper asset. Bitcoin is one of these assets which is a lot of things at one time, but more importantly, it is a currency with finite supply and unlimited trust. And that gives it the kind of a payoff of a non-linear asset. Because effectively, when you look at Bitcoin price, you don't really look at the price appreciation, you're looking at the adoption curve. And what you're looking is very much a Metcalfe or Moore law, more than just on the price appreciation. And if you look at the penetration rate right now in the US, we're about 12%. So the capacity to keep progressing is just in front of us. So net, the US, despite all these ETF you mentioned before, is still a kind of a field of opportunity for Bitcoin adoption. The big warehouse are still not in the game. The big insurance company are still not in the game. There is plenty of adoption still at the corner. And CoinShares want to be positioned to be part of this journey.
Do you anticipate the momentum will continue and we'll continue to see a Bitcoin rally, or do you think a steep correction is something that's on the horizon?
Look, everybody tried to get me to give some price indication. We have a long-term, mid-term view and more than just like the next 5 minutes. So we're not looking at it just as traders' eyes, but more as long-term investor. Our journey started in 2013 actually in crypto, and we kind of like looking at that on the multi-decade, multi-generation kind of glasses. One thing which is approaching is the halving. The halving is always a very discussed point in the Bitcoin narrative. There is, since the ETF launch, the kind of asymmetry between offer and demand has been very important. I think, the average daily Bitcoin inflow into this ETF is around 4,500 Bitcoin per day, while the newly supply is only 921 Bitcoin. This newly supply is going down by half of it in a few weeks' time, and that's just going to accelerate. Of course, the halving is a big, I would say, deep movement, and it's not repercuted. It doesn't have an implication in terms of price immediately, but it is a transformation move. The implication of that kind of reflect as well against the new supply of gold, the Bitcoin supply is about to go down from 1.9% per year to 0.9% per year. That's the first time in the new supply that we are now below the new supply of gold. And in the kind of legacy kind of fight, kind of a far distance battle between Bitcoin and gold for allocation of store of value of kind of like this ultimate asset, uncorrelated asset, it's kind of a very, I would say, tipping point for Bitcoin in this combat.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.